traders. This is Blake Morrow. You are listening to the Morning Edge webinar. So let me grab my bias chart, and we're going to take our time since we've got some news today. We have, I think, pending home sales, and then we have crude oil inventories. Let me just double check that. Pending home sales, yes, and crude oil inventories. That's at 10 and 10:30 a.m. respectively, Eastern. But that's obviously going to be overshadowed by the Fed. So what we're going to do is we're going to take a really good look at all these currencies, and I want to start obviously with the euro dollar. Let's go here, and I'm going to delete everything and for the euro, and let's take a really good look at it. Okay, so obviously, we had knocked our head against some pretty key confluence of resistance this week. All right, so that is going to be a really great resistance level to trade from, in my opinion. Now, getting up there is going to be the question. Are we going to be making it back to 111.30? All right, and 111.30 is a confluence between this, the previous peak here, okay, and to the low, and then the just most recent peak, around 2 weeks ago to the low. Confluence comes in at 111, basically 25, okay, and 111.25 is critical resistance, or a critical resistance probably for today as well. Now, let's take a look here. How important this support is. I mean, you can see how important this support is that we're holding, and that comes in, and let's just say it's 110.20. If you guys want to buy the euro right now, this is, I'm not saying that do it. I'm just saying that if you want to buy the euro right now, your risk is manageable. Okay, I personally would rather short the euro up here at 111 and a quarter, but if you want to buy the euro, your risk is below the 110.20. We break through that, and it probably will kickstart a move lower. I'm assuming. Okay. This would be mid-range, and many times before an FOMC or interest rate decision or jobs report, we tend to go mid-range. Mid-range would be right here. So if you get long here, we might drift back up to 110.60, 110.70, but I think 110.20. It's the low right here. 110.21. So 110.20, 111.25. It's a range. 110.20. Resistance 111.25. It's a key level of resistance, and we are in a range environment. Okay. All right. So there you are. That's a range for now. And again, if the Fed seems a little bit more hawkish, and we break through the 110.20, I'm probably going to chase the euro lower. I mean, when I say chase the euro lower, we're here right now. If we break through here, I'm probably going to be shorting down here. But you have to keep in mind, from a swing trading perspective, that's not chasing. Chasing is shorting down here after a sustained move lower. We had a rally, pull back to some resistance, rolling over, because if we broke through here, I would expect to move back down towards 109, maybe even to retest this 110 level, if that's the case. Now, what I'd prefer to see in today, what I prefer to see is I'd prefer to see a little bit of dollar weakness following the Fed meeting, okay? And we rally back to 111 and then short. That's what I'd rather do. I'd rather short somewhere up here, okay? Hopefully that'll be the case. I just don't know if that's going to be the case, but that's what I would hope to do, Okay. Um, get rid of these drawings here. Oh, there we go. Okay. Let's go over to the cable. So the pound, I don't understand why it's so bullish this morning, but it is. Um, we just are, you know, I guess it's probably just position squaring, but you can see we're right into channel resistance, if you will. It looks something like this. We drew this out yesterday, so I'm just taking that support from yesterday, putting it over here. Let's go over to the hourly just to make sure that it's, we get those trend lines drawn nice and this one was just there because I did copy paste. I did that, so you can see we're challenging some near-term resistance. There's no fib number or fib level associated with it, so let me get rid of this really quick. Let me get rid of that. Just extend that out. So realistically, resistance. I mean, we're pushing up against resistance now, but I would say bigger resistance is up here at 156, 70, which is going to be pretty significant resistance. 156.70. Now, if you're somebody that's like, well, I want to play the dollar long, well, maybe you short the pound right here at 156.37. Put your stops above 156.75 or 156.85. That's a possible trade. That's something that you could do right now if you wanted to play into dollar strength. Again, I'm not trading. I'm just giving you guys some options. Like if you look at this range, you go, well, if I short it here, this is where you talk about manage risk. If I short here and I'm looking for a move back down into the lower end of the range, my stop is up here. My target's down here. You're risking one to make three at this point. It's not a bad risk reward to be short up here. Again, I'm not taking a trade like that ahead of the FOMC. I'm just giving you guys some options of things that you can, possibly do right now while you're, waiting for the Fed. Support for the cable. Okay, we have to imagine that this trend line extends out, right? Trend line extends out. Oh, I need to draw it. Hold up. So this support, this spike low, this is an hourly. That spike low is going to be very important today. Because you imagine if we come down, right? If we come down, we're going to be testing a channel low, channel bottom, also spike low. So that comes in at 55.87. So I'm going to say 55.85. 55.85 is going to be support today. And we're definitely in a range. All right, let's take a look at the Swissy. Here's the Swissy. So the Swissy, one of the things that kind of worried me about the Swissy yesterday, I did not get out of the the Swissy though. I'm still long. Okay, still holding my full position, just sitting in it. One of the things that worried me about the Swissy yesterday was this false breakout. I'm not going to lie. I'm going to tell you that was very concerning to me. It was concerning because I figured that we'd be stalled up here today and not able to press higher. But also I look at the other Swiss pairs like the Euro Swiss. This is just this is a flag pattern, just so you all know. Okay, I drew it out yesterday, but still still flagging here. Now keep in mind this flagpole could be here, it could be here. I mean it could be here. It's still very valid is what I'm trying to point out. all we're doing is we're consolidating. We're just grinding lower. You can see the grind lowers, and the Euro Swiss is being bought on dips. I mean, you can see we dip to new lows, and it's quickly bought up. See that? So that's a characteristic of a flag is, you hit new lows right here. Okay, you hit new lows, and then investors come in and scoop it right back up again. All right, you hit a new low, and then you get this hammer. That's just telling you that people are really wanting to sell Swiss francs. They're just trying to do it on, as it rallies. They're just using the Swiss franc to sell into rallies. That's exactly what they're doing with the Euro Swiss. Dollar Swiss is the same way. I mean, the dollar Swiss may have had a false breakout yesterday. Okay, false breakout above the highs, but I think that was more of a product of dollar weakness versus Swiss strength, is what I'm trying to point out. So we're still in breakout territory. Dips to 95.50 are very well supported. I mean, my cost average is 95.70, and it's my full size position. Okay, and I'm sitting in it. I'm not taking it off the table. And as long as we remain above this red line right here, I don't care. As long as we close above here. I mean, I do care. I mean, of course, I don't want it to come down, but it's not going to affect my decision making on should I be long the Swiss or not. Swiss pairs, excuse me. And that would be short the Swiss franc. So support today is going to be very important on any dip down to 95.40. Okay, and if we get down to 95.40 support, it's the Greek gods. Oh, thank you, Dollar Swiss, for getting down to 95.40. I got long. Buying it down there. Okay, anyway, you guys get the drift. That would be the Greek gods singing if it made it down there. The Forex gods. Excuse me. All right, resistance 96.72 would be resistance right now. So 96.70 is what we're dealing with. You can honestly tell me I completed your day, didn't I? Chris says yes, it means to like that. Did you guys miss? Obviously, some of you didn't. Chris did. So yesterday, I said something like, "He's not going to go down here," and I'm like, "Oh my God!" So the other day, it was like last week. So one of the things that I wanted to do this summer, aside from all the trips we've taken and whatnot, one of the things I wanted to do this summer is I wanted to uh, uh, take a watch the Star Wars movies, the whole series with my kids, because obviously Star Wars is coming out this fall, and I wanted to make sure that the kids have all seen it. And so we went through as I watched them as a kid, and if you're new to this webinar, my very first movie I've ever seen as a kid was in 1977, and it was Star Wars. Okay, it was the very first movie I'd ever gone to. Actually, I should probably take that back. It was the first movie theater I'd ever been to, because what my parents used to do at that age of my life is we'd go to, and some of you probably remember the drive-ins. So we'd go to drive-ins, and so I've been to drive-ins, but that was like my first movie theater experience with Star Wars. So it was so, to me as a kid, being just 6 or however old I was at the time, 6 or 7 or 5 or whatever. It was such a neat experience. Anyway, so I made my kids suffer through the whole Star Wars series this summer, and when I said Isa is something or other yesterday, all I could think is that stupid character Jar Jar Binks, and I'm like, because I said something that sounded just like him, and then he appeared in my head. It's horrible, horrible. So obviously, Chris says, "Yes, Misa like that. He's a Misa, okay, enough. All right, gotta go. All right, dollar yen. So here's the dollar yen. Sometimes you just need a mental break from trading, right? From doing chart analysis, just a little mental break. So here's the dollar yen. We're attacking a trend line here. I'm so upset the way I traded the dollar yen this week because I got out of it yesterday. I got out of my short, but I knew on Monday when the markets came under pressure the last couple of days, I knew that, and through last week, we were sitting down here at 123 and change, and I was short from here. We were here, and I'm just like, I should take profits off the table. And then stupid me, I got out of it yesterday here. And of course, it even dipped down overnight, and I could have got such a better price even if I just held on to it throughout yesterday, but I didn't. I traded the dollar yen very poorly. Even though I made money, that's a trade that I look at in retrospect and say I could have done better, and it's important even, 20 years later into my trading career that I still look at trades that I've done and say, well, why did I do that? Why, that to me was just more greed than anything. It's like, I knew we were at a 38% retracement. I knew we were coming in a turnaround Tuesday. I knew it was Monday afternoon, and I knew that the market was already starting to show some signs of life on Monday afternoon. You remember even Monday during the lunch money webinar, I said, hey, tomorrow's Tuesday. We're starting to see a bounce here, blah, 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 blah. I knew it, and I just ignored my own analysis. Well, anyway, you can see that we're obviously, pushing right back up here, and so now I beat myself up about it enough about it. But as long as you guys know where I'm coming from. All right, so resistance right now is not too far away. It's 123.80. If we break through 123.80, that exposes a move back up to 124.50, in my opinion. It exposes a move back up to here. So 123.80 is resistance for the dollar yen. We are still in a range. Obviously, I don't want to be Mr. Obvious here, but 122.90 is huge support. If we have let's say we have a big disappointment, from the FOMC, whatever that disappointment is, if we have a big disappointment from the FOMC and the dollar really comes under pressure, then this 38% retracement is really the ultimate bull bear line in the sand for this dollar yen. Because if we break through that, this dollar yen, it's obviously we're going to start trading back towards 120 yen. So this is a really big bull bear line. In other words, you try to keep a bullish bias while you're above here and a bearish bias if you drop below. Okay. And I mean, we're in ultimately a real big, range. So just, but I'm just saying from an intraday perspective. Okay. Canadian. So the Canadian, I'm going to be really, really upset if it doesn't dip down here. I'm going to be really upset that I'm not buying it at this moment, and if that ends up being a low, because as you all know, I'm really, really bullish the dollar Canadian. Okay, very bullish the dollar Canadian. I do want to be a buyer on any dip towards 128 and change. Just to let you know, I have 2 orders below 129 to buy the dollar Canadian. I have 2 orders at below 129 to buy the dollar Canadian. One just below 129 and one towards 128.50. Okay, I am trying to buy it on dips. I'm going to be very upset today if the dollar just turns around and takes off without me. Okay. I'm going to be very upset if we just go, just start taking off. I don't know if that's going to be the case, obviously, but and let me get rid of this just because this will, you know, kind of screw up your thinking. But if you look at this, would be a flag pattern. Okay, flag pattern's already nullified. Like we should have broke down already. If that was a flag, the flag, well, at least it will be now. This is 50%. This is about 50% distance of the pole. You know, if it doesn't break down like now, like soon, it's it's not a flag. Um, Unmeasurable becomes. That doesn't mean we can't break down. It's just the you know, measured move of the pole. You know, and we have this head and shoulder pattern it's trying to play out, but you know, it's not really doing it. So what I'm thinking is, what if, and I'm going to be really upset if this happened, what if we had a little false breakdown and then now we're just ripping up into new highs? I'm going to be very upset if that happens. And I'm sure a lot of people that are short the dollar Canadian are going to feel the same way. But regardless, 129 is very key support. And any dip below, I was hoping we would just dip below 129, stop out some people, you know, just trip some stops, and I was going to be down. I have bids down here, so I was hoping to just get to buy up the dollar Canadian as it dips through those stops, but it's not seeming the case right now. All right. Anyway, support 129, whatever these lows are here. 29.4. Yeah, I mean, you know, I try to figure out where, if I was short the dollar Canadian, which obviously I'm not, but if I was short, where would I get a little concerned? Like, you know, if you're short, where do you go? Oh my God, I'm going to get squeezed hard. That previous low is 129.77. Okay, think about this hourly chart. Let's just imagine a couple more hours of building price here. I mean, if we rally above this blue trend line, does that really start to squeeze everybody? Especially if it looks like this. So 129.80. Does it start to trip stops? It's still bullish. All we're doing is we're consolidating a very, very bullish move, you know, a very bullish trend. So anyway, I mean, look at the long wicks down here. It's being bought up, guys, just like the Swissy is, you know. Same thing here. All right. Let's go into, oh, it's already time. I'm going to put you guys on break. When I come back, we're going to do the Kiwi, the Aussie, dollar index. We'll do the Nordic currencies. We'll do the peso. We'll do a little jiggy dance. I'll be back in a few moments. Don't go anywhere. Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Okay, so we're going to continue on here with our analysis. We've got to do the Aussie Kiwi dollar index, some of the other, you know, we'll do the Nordic currencies. Look at the freaking peso, right back up to 1630. Crazy. Okay, we'll go into those. Let's go into the Kiwi. So, like I said earlier this morning, I'm really concerned for the Kiwi. It's I mean, I'm not trading it, but I'm looking at the Kiwi dollar thinking, man, it can't even sustain a bounce. All right. So we're above the trend line, and I guess it's higher now than it was yesterday when I was talking about it breaking the trend line. But look at this failed rally. I mean, this to me tells me there's just no interest to buy the Kiwi dollar. I mean, maybe there we'll find a reason, and maybe that reason is rebound in China. Maybe Chinese growth starts to rebound. I don't know what it is, but right now there isn't a whole lot there, and we have to pay really close attention, in my opinion, to this support. Okay, which looks undoubtedly like it's going to come back into play, and so that comes down at 66 cents. And if the Kiwi dollar can't hold above 66 cents today, that's going to be a very big problem. Okay. So 66 cents should hold, should. Okay. And this resistance right here, that's probably going to come into play too, um, on any rally. So you have to imagine, even if we hit a new high today, is the new high just going to be a marginal, a marginal and a failure, just like here? Marginal new high and it fails. So I'm going to mark up these two areas, guys, and I think you have to be very careful with the Kiwi, both on the long side and the short side. I don't want to sit here and say, oh, oh wow, the Kiwi looks so bearish, because it doesn't look like so bearish that I just need to just run out and start shorting it right now. No, but I am worried about the price action, that it can't even sustain a rally. Okay. So anyway, is Windows 10, did it launch today? Oh, I think my email said we get it. I'm not updating this computer. At least I'll have to see how my other computer works. Actually, one, two. I'm testing three other computers before I do this one that I'm on right now, because I don't want to screw up the webinar computer, obviously. So I'll have to test it. After the Windows 8 debacle, it just worries me. Anyway, going back to the Kiwi. All right. 66, 67, let's call it 67, 70. We're in a range now. Okay. 66, 70, or whoops, 66600 and 0.6770. We're going to in a range. Here's another problem. Let's go over to the Aussie. So the Aussie yesterday, and this is one of the reasons why I wanted to short the pound Aussie is because I was pretty convinced yesterday. I'm like, man, it looks like we're breaking here, so the Aussie might start to get a rally, and it just rolled right back over again. Like, how in the hell is the pound? How the hell? Well, the pound Aussie isn't going to come down if the Aussie can't get a lift. And so right now, I thought we were going to try to break this downtrend, but sure enough, the Aussie just rolled right back over again, and it looks threatening too. I mean, the Aussie looks like it's just going to take out new lows, doesn't it? So previous support, current resistance, be right through here. So I miscalculated. I thought it was going to be right to the tick, but it's really not. It's 73.50, 73.50. Still on the bearish trend. And by the way, the Kiwi, I put range, but it's probably still a bearish trend here. 72.60 support. Let me check something with the Kiwi. I'm gonna go back with the Kiwi really fast. I want to see if there's any downtrend that's really still capping the Kiwi. Yeah, that's our previous trend line there. Yeah, I don't know. But I still think the Aussie is bearish, a bearish trend. All right, let's go into the dollar index. That's not what I wanted to delete, but this 38% retracement is holding. You can see it right there. So that's 96.20. Low is 28. So and the 38% retracement is 96.21. So 96.20. That is key support. 96.20. That is key support for the dollar. Resistance. Probably right up here, which previous resistance there, but you can see all these little spikes. Let me go through here. Spike high from yesterday, 96, 96. So really just like 97. We're definitely in a big range here in the dollar index. All right, let's take a look at the here's the peso. Let's take a look at the peso really quick, and then we'll take a look at the Nordic currencies. I mean, look how strong this thing is. I mean, insanely strong. Like, wow. I mean, the peso looks like it wants to just rip higher, doesn't it? It just looks like it wants to rip up into new highs. And what's going to stop it? So 1634 support is still here at 1620, but I mean, I mean, look at the acceleration for the peso. That's insane. We're doing our next meetup in Cabo San Lucas, folks. We're gonna meet at Cabo Wabo. We're gonna hang out with Sammy Hagar and drink some tequila on the cheap. Any of you guys down? Did I ever tell you I saw Sammy Hagar at Cabo Wabo? We went to Cabo for New Year's it was like 1999 New Year's, because then I went Mazatlan for the turn of the century. Ooh, excuse me. And anyway, it was like no, it wasn't New Year's. It was like it was a vacation. It was like a summer vacation. Anyway, I was there for like a week in Cabo, and it was like on a Tuesday morning. We were had we were just getting some food. It was like maybe like around like 11 or 12 is just before like the lunch like got kind of busy, and there was no one in Cabo Wabo. I mean, I'm talking there was like four people and us, and there's no one in the bar, and we were just there to get some tacos or whatever. And yeah, Sammy Hagar walks in, and we were like, Sammy Hagar right over there. Craziest thing. Thomas says, tequila bender, I'm down. Great. And no, I did not get an autograph. I didn't want to be that guy, that guy that, hey, Sammy, you gotta get your hair. Ugh, I can't drive 55. Woohoo! I love you. I love your music. I wasn't gonna be that guy. So, 1635, 1619. I mean, it looks bullish, doesn't it? Just have to put it up there. 1619, 1635. Do I have a? I need a thing that says extremely bullish because this is bullish. Let's go over to the Norwegian krona. I mean, here's another example of a currency pair that is not selling off. Wow. What happened to the euro dollar? Euro's rolling over a little bit. I mean, we're near our lows of the day. We are at new lows of the day. Is the euro really going to push lows pre FOMC? The pound's even starting to show some weakness. Aussie's near its lows. Kiwi's weak. The yen's near its highs. Swissie's kind of struggling here. The Canadian looks strong. I mean, look at this Norwegian krona. Look at this candle here. 810, 827. Let's go over to the well, yeah, I guess. I mean, until we break through here, it's bullish. Until we break this blue downtrend line or blue uptrend line, it's bullish. Yeah, yeah. Um, U.S. dollar, Swedish krona. I mean, I mean, look at how well bid these are. I mean, it's the dollar looks pretty stout. 867, 850. 8.50. Is it 67? Is that what I just said? Yeah. So anyway, there is those are your bias chart. So go ahead and write all that information down.